Hmm. Pankaj Pandey also joins us today from ICICIdirect.com. Pankaj, MSCI additions, some of the stocks are going to be active. What's your view on Adani Energy, Lenskart, Lotus Labs?
Yeah, hi, good morning. Thanks for having me. See, when we look at, say, Lotus Labs, we covered that stock. So I think the numbers were quite strong for this company, especially on the CDMO side. And I think the capex pipeline is also pretty strong. Only challenge is that the valuations or our target prices are largely sort of reached. Again, we'll have to sort of see because valuations are definitely not cheap. But that way, besides DVs, I think this stock has been doing very well on the CDMO side. On the Lenskart, numbers were sort of good because with 33% kind of a revenue growth, both the domestic plus the international business in terms of volume growth has been pretty good. And we've seen a margin expansion, so that looks good. Don't have a view on Adani Energy Solutions. Don't track the stock.
I just want to come back to you on what happened in yesterday's trade, especially last 15 minutes. We saw Bharti running up. They're trying to discontinue the base packs and thereby going into premiumization. How do you look at Bharti and maybe Vodafone, if you have a view on Vodafone as well?
So on the Bharti side, overall this discontinuation of this pack, our sense is that this implies a price increase of nearly 16.5 odd percent. What we were penciling in is about 10% kind of a blended improvement. Bharati overall has been doing very well. I think this company has been sort of delivering free cash flows of nearly 16,000 odd crores on a quarterly basis. So this is our topic in the telecom space with a target price of 2350. And I think even prior to that, we have seen their ARPU sort of inching up. So from that perspective, I think Bharti Airtel looks good to us. I think Vodafone continues to face challenges in terms of capex. See, 50,000 crore capex also, they are finding it a bit challenging to sort of raise. And compared to that, the other players have done the capex in excess of 1.5 lakh crores. So I think Vodafone, people will consider this stock as cheap, but I think the EBITDA needs to sort of double to justify the current valuations. So which is why I don't prefer Vodafone idea.
From what Grasim's commentary has been in the conference call talking about the paints business, they're saying that they are guiding for a 50% plus revenue growth for FY27 and Opus remains on track for 10,000 crore rupees of a top line growth. Talking about price hikes, they said that in multiple phases with impact flowing into Q2 is what they foresee, given that a large part of their RMC is linked to crude prices as well. And their focus remains on gaining market share. Wanted to understand whether that pressure is now off from Asian Paints as to what Opus would bring in, because Asian Paints has had a stark underperformance ever since Opus's launch.
Absolutely, Aisha. So when we sort of look at the paint business, the company has taken a price hike of 9 odd percent. And when we look at, say, Asian Paints and other numbers, even Berger, the volume growth continues to be high single digit, about 9 odd percent. And I think raw material volatility has been still sort of persisting, but we would want to believe that going forward in the second half, things will become better. So I think Opus taking a price hike of 9% is definitely welcome news for companies like Asian Paints and others. See, we don't cover Grasim as such, but we like the individual businesses. So, for example, even for Ultratech, our sense is that it is a topic in the space. Volume growth is expected to sort of pick up in the second half. And I think overall sense is that the kind of price hike of 3 to 4 odd percent what they have taken, bulk of the price hike is sort of sustained. So we would expect a slightly better H2 for cement companies, including Ultratech. We don't cover the other businesses, so I can't comment.
Sure. What about paints? You think there is value in buying into any of these names while they're still reeling under that crude inflation impact?
Well, short-term wise, I think Berger Paints is the only one which has been looking attractive. Asian Paints, the stock, of course, it's recovered quite well from those 22,300 levels many quarters back towards a point when the stock is now on the verge of breaking 29,53,000 mark for Asian Paints. I think Berger Paints is a slightly more stronger chart. The stock has been a little bit more resilient. And more importantly, when we look at the pain stocks, we look at a direct correlation or a negative correlation with respect to crude oil prices. And what we've seen in the last, I think, 3 months or so, when crude oil prices have ebbed off from those $110, $118 towards $85, $80 approximately, I think we've seen Berger Paints to be a little bit more stronger and a resilient name as compared to Asian Paints, where the stock tends to be a little bit more volatile as such. So I would sense that Berger Paints could be a good bet. But I think from a long-term perspective, the both of these stocks have been very strong, consistent performers, except for the phase of the last 3 years prior, where because of the news flow regarding Birla Opus, many of these stocks went through a correction. But largely, I think the long-term trend for the entire paint stocks has been positive. But it's just that because of the crude oil prices rise and the recent news flow for the stock prices, we've seen a stark bit of an underperformance over the last many years.
Okay, that's that, of course, on what you're likely to see from the paint sector. But just analyzing some of the other buzzers which are going to be in focus today. And we were, of course, talking about, some of those earnings reactions. So KR and Heat is going to be important to look out for. There's going to be Lenskart as well, which has delivered an overall beat, revenue uptick of 43%. And then, of course, there is the likes of Texmaco as well, which is going to be in focus. There's Viatech Vabag, which has fallen short of expectation. The Q1 revenue has come in at 887 crore rupees. While that has posted a growth, the EBITDA has actually declined to 80 crore rupees. And that's much below what the market as well was expecting. And mind you, this is versus a comparable of 95 odd crore rupees. Having said that, Pankaj, wanted your opinion on some of these niche plays like a Viatech or a KRN as well.
So on the Vatic Mabag, see this gross margin decline of some 500 odd bits is definitely negative. Although revenue growth has been good double digits, but our sense is that numbers are sort of mixed. So any kind of a correction would be a sort of an opportunity to sort of further recommend the stock. Structurally, we like this company largely because it's a play on water management solutions. So from that perspective, we like this company from a portfolio perspective. But definitely numbers are a mess. So what we have liked in terms of number is again Sansera. Domestic growth has been pretty strong, plus the aerospace, defense, and semiconductor division, which carries an order book of 4,000 plus odd crores, has been sort of doing very well set of numbers. The top line growth and bottom line growth has been pretty good. Similarly, I think Somani Ceramic, the numbers were good according to us. We've seen a volume growth of 3%. But since the company has taken a price hike of 20%, overall, the tile space looks attractive to us because this is one segment which has been sort of grappling with margin pressure. In addition to that, if I have to highlight, probably Caplin Point also came out with a good set of numbers. The US business is doing very well. They're doing a capex of 1,000 crores. Half of it is done. So that looks good to us. So yes, there's some hits and misses.
Pankaj, hang on with us. We'll take a small break and then come back and discuss more stocks before the market open.
The market right here on ET now. Let's just see what the implied open for the Nifty is looking like after yet again a range-bound session in trade yesterday. Although Bharti, of course, did manage to pick up the momentum towards the latter part of yesterday's session. Jio Financials, that's going to be the one to look out for as well today, given the price action that you've seen in the stock in the last, I think, 1 or 2 months in any case. And now BofA is set to acquire a near about 50% stake as a JV partner in Jio Credit for about 18,268 crore rupees. Pankaj, curious to know, how are you reading into this news around Jio Financials and the prospects of what the stock actually fundamentally would deliver from here?
Aisha, difficult to build a model for this company given the fact that a lot of new businesses are upcoming. But pertaining to this transaction, I think the lending book or this business is valued at about 36,600 odd crores, which is somewhere about 1.4 times book value. And probably it can sort of could drive valuation by 5 to 7 odd %. So that is what I have to sort of share.
Right. This Tata Motors CV as well, a very steady Q1 for them. EBITDA uptick of 16%. Domestic market share has also seen a, inch up of about almost over 200 basis points on a year-on-year basis. So that, of course, is looking good. Pankaj, we've seen excellent performance from two-wheelers, from PVs. What do you now sense the structure around CVs is going to be, and whether there is buying opportunity further from here from CVs particularly?
So I think overall, when we sort of look at, there's been some bit of a margin pressure, but not significant. Whether we look at Ashok Leyland, even Tata Motors CV for that matter. See, the Q2 growth is again expected to remain in good 20% plus. And I think where we are sort of drawing a lot more confidence is that some of these players are looking to sort of go more global, than like what we have seen in case of, say, two-wheelers. I think two-wheeler, the highlight has been that most of the players have done very well on the export front. Something similar is what we might expect even for CV side. So although the CV base is still sort of higher, but our sense is that this is another segment which can sort of do very well. So Ashok Leyland and Tata Motors CV looks attractive to us. In general, the entire auto as a pack is sort of doing very well. Even something like tractor, despite a higher base, we are still seeing good volume growth. So auto is in a sweet spot. The only challenge lies with the higher raw material prices. Hopefully, if it sort of cools off in the next quarter or so, I think we could expect a lot more better price performance from some of these counters.
Pankaj, did you have a look at the GMR Airport's number? Good yields coming in despite lower traffic on the back of the geopolitical issue.
No, so we don't track GMR airports, but what we like, say, for example, if I have to highlight is Astral. I think volume growth of 10% is definitely better compared to the peers like Supreme, because April month was pretty sort of challenging for them in terms of volume. And I think volume growth of 10% for a player which has got a good presence on the CPVC side or on the plumbing side looks good. Even on the paint and adhesive business did very well with the growth of somewhere about 30 odd percent. So Astral numbers looked good to us, and even for Somani Ceramics also, I think I already highlighted, I guess.
How do you look at Apollo Hospital?
So Apollo Hospital, one is when we look at their core business, which is hospitals, they maintain their profitability at 24 odd percent. And good part is that they're doing or undertaking one of the massive capex of adding about 4,300 odd beds. So that is entailing about 11,000 odd crore kind of a capex. About 3,650 is what they have done. So I think the core business remains pretty good. So we like the entire hospital as a space.
I mean, this is one of those core portfolio sectors. But Kunal, in this weakness that you saw yesterday on a Max, Fortis, Dr. Agarwal, the allied spaces, all across, A, do you foresee further weakness? And B, would you be a buyer in that weakness?
I would foresee further weakness for these stocks because it's just been, I think, 2 or 3 consecutive days where the stocks have gone through a correction. And typically, I think the best way to try and identify or segregate corrections, which could be mean retracement towards corrections, which could be reversals of sorts. The best distinction for that is volumes, and the volumes yesterday for the likes of Apollo Hospital, Max Healthcare was on the higher side. So which means that there is a strong indication of some delivery-based selling, which could have happened to the stock price. Now, after this 2 days or 3 days of a decent price correction, there could be a very mild bit of a bounce back. But if the volumes tend to increase higher, that could mean that we are looking at traders trying to book profits or at least reducing the delivery positions from many of these names. So that could probably alter the direction, the trend for many of these stocks over the medium to short to medium term. So I would probably not be too much gung-ho about buying these stocks just because there has been a 10% correction the last couple of days. Would wait out for a point where these stocks drift down further. Maybe another 5%, 7% lower from yesterday's closing could actually be a better price point.
Well, effectively, the market is pricing in those room rent regulation risks. I mean, not to say that this script hasn't played out earlier as well. In the past decade, you have seen these kind of, moves or at least whiff of a move come by earlier as well. So if room charges get capped, near hotel tariff levels, three-star hotel tariff levels, that is. It does squeeze the very high margin room revenue that is a very key for profitability level for most listed hospital chains. And you saw that weakness play out yesterday as well. That said, let's just see where the Nifty pre-open rates are settling in at and what is it that you're currently seeing on the screen. I also want to see what the likes of Adani Energy, Grow, Laurus Labs and then Lenskart are going to be up to, because they've been added in the MSCI index in the August review. So this cluster of stocks is going to be important to watch. Add to that, of course, Lenskart's earnings have been quite solid. So that, of course, is going to be key to look out for. Let's see what the healthcare stocks and hospital stocks in particular are up to, because Apollo Hospitals, while the numbers have been great, again, this is that overhang of the tariff cap, which perhaps may sour sentiment, but not quite. Again, these are just the pre-open rates. The stock is spiking up 4.5% as we speak. There's also GMR Airports too, wherein the EBITDA saw an uptick of about 22.5%, largely in line with what the market was anticipating. Sun TV as well came out with its numbers. EBITDA uptick of 13%. The cricket business growth is at 30% plus levels, including the new acquisition. And then, of course, Lenskart, like I said, good numbers from there. Also look out for what Astral, Balkrishna Industries, SBI Cards do in trade, because they've been excluded from the MSCI India Index in the August review. So that sector or segment of stocks also is going to be important. Bharti Airtel, let's check in on that stock and what kind of an impact is it having on Vodafone as well. Bharti is now almost nudging that 2,000 rupee price point, 1.5% higher, flat for Vodafone as we speak. Actually, Kunal, we've not checked in on Vodafone. It's almost there at that 13 plus level. Where next for Voda?
Yeah, I think, but I've sensed that the stock price trend has recovered quite well. The worry for Vodafone Idea was that the stock was very, very volatile in the previous, I think, the last many quarters. But that volatility has dropped down massively for Vodafone Idea. We are looking at an ATR, an average to range for the stock price, which is around 2.5% to 3% broadly, from a point when the ATR at one point was almost 5 to 7% for the stock price. So that's a significant drop down. That tells you that the volatility for the stock or the inherent up-down movement for the stock price has reduced significantly. Recently, also the stock price corrected and completed a mean retracement towards 38% mark. So I would say that closer to 12.5, 13 levels could be a good price point to accumulate Vodafone Idea for even as a say medium-term time frame, say 3 months, 6 months. I would look at a 10% to 15% upside for the stock in the near term.
Okay, that's that on Vodafone Idea. Pankaj, I know we spoke about Bharti, but what about Vodafone Idea and the rub-off that Bharti's price hikes will have on the rest of the telcos?
So Aisha, I just mentioned that, so with Airtel sort of reshuffling this, overall, it is a sort of a price hike of about 16 odd percent. Now for the Vodafone Idea, I think the challenges are quite high. So one, they need to sort of sort out their capex funding. The other is that the EBITDA needs to sort of double to sort of come up to valuations of Bharti Airtel, and that is where we are sort of very skeptical on the stock. We have a clear preference towards Bharti Airtel.
Okay, that's the take coming in on telcos. Just want to check in on the big buzzers from yesterday as well. And of course, the aluminum plays held out very well. Pankaj, Kunal was also flagging off that metals perhaps has been the best performing sector of late. A fresh move in aluminum names. A, what's driving this? And B, whether there is an investable opportunity here according to you?
I think the entire metal as a space is making comeback. Whether we look at, say, Tata Steel, where our sense is that while the prices are expected to be slightly softer, but Q2 volume growth is expected to be a lot more better. What we like is, again, the aluminum as a pack. We have already seen companies like Hindalco and Vedanta Aluminium sort of doing very well. What we prefer is Vedanta Aluminium, given the fact that the decline in the prices has not been so much. I think the peak of aluminium prices was somewhere about $3,800 or $3,900 per ton. Currently, it's about $3,500. So we would want to believe that we could continue to see good amount of margin expansion for some of these companies with better volume growth. For Hindalco, I think the novel business is clearly clocking more than 525 rupees a dollar per ton in terms of EBITDA. So both the companies are looking attractive, but Vedanta Aluminium is something which looks a lot more attractive from a valuation perspective. And I think the dividend yield is also expected to be good in the stock.
Okay, that's the check coming in on Hindalco. In fact, now let's revisit for the benefit of our viewers who are just joining in this big breakout move on Nalco, Hindalco holding out very well. Further up move, do you sense? And can you still trade them?
Yeah, I think so. I think both of them are very strong charts. Hindalco is a little bit more high beta stock, but again, it went through a 20% correction the last 2 months or so, from 1240 to almost 930, 940 was the low for Hindalco, towards the point where the stock has now crossed the 1000 plus levels. Nalco, I think, had moved up towards 440, 460 mark, and that stock corrected towards 380, 360 levels. So again, a 20% correction completed for Nalco. So I think both of these stocks have been doing fairly well over the last many years. They went through a patch of a 20% correction, which is again a kind of a rarity for these stocks. But I think for traders who try to capitalize this on the short-term charts, completed the mean retracement, I think for them, I would suggest to hold on to the stock price even at current levels. Historically, whenever these stocks have gone through a 20% correction and retraced towards at least a 50% band of the retracement or the price correction, these stocks have at least come closer to a breakout of the previous major highs. So which means that from a time frame of another 3 months or so, I would look at at least another 7 to 8% upside towards 10% upside for many of these metal counters, including Hindalco and Nalco.
Let me check in on what Jio Financials as well is up to. Bank of America is set to acquire near about 50% of Jio Credit, which is Jio Financial's NBFC arm, via 18,300 crore rupee primary infusion. And of course, the deal comprises of 6,600 crore rupees of equity and 11,655 crore rupees through warrants convertible within about 18 months. Jio Credit is, of course, already scaling up rapidly as we know it, with a 30,700 crore rupee AUM and 726 crore rupees of net worth, while delivering roughly about 1.4% annualized ROA, at least in Q1 of FY27. Jio Financials now 2.5% higher, decent set of volumes as well. These are just the pre-open figures. 262 is what the stock is nudging in trade. So that's pretty much it when it comes to what you're seeing on some of the big buzzers in trade this morning. But Godrej Consumer Products, let's address that as well. And that really turned out to be the biggest casualty yesterday. Pankaj, that very surprise move from Sudhir Sitapati deciding to step down now. I mean, not to say that this has not happened earlier. Many CEOs who the markets liked have stepped down. You've seen these knee-jerk reactions played out. But having said that, just zoom out a little bit on what you're seeing for FMCG plays which are more rural focused, like a GCPL.
So I think in the FMCG space, when you look at the personal consumption as a category, so that is where I think players have not been able to sort of deliver the kind of volume growth, whether you look at HUL or whether you look at Godrej Consumer. What is doing well is the food category, so which is why when you look at, say, Tata Consumer doing good set of numbers, Marico doing a better set of numbers, Nestle has been sort of topping the charts. And I think when you sort of see uncertainty related to leadership, that is where the challenge lies. And we have already seen companies like, say, HDFC Bank, Kotak not really doing well. The Tata Group again will face similar challenges. Mind you, the Tata Group, the companies contribute nearly 10% of the overall Nifty index. So I think whenever you see this kind of issue, especially related to top management, one thing which clearly happens is that this stock goes into a time correction mode. Price correction is one-day phenomena, so I wouldn't really sort of give too much weightage to that.
Understood. Okay, that's the take right now coming in on what is it that you're seeing in terms of the market texture. Just checking in on the likes of a TCS, a Tata Consumer, Tata Steel, Tata Motors PV. Let's see what the Tata Group names are up to in trade. What kind of a reaction are you seeing thereof? The first rates haven't quite trickled in on these names at least. And then, of course, a lot of earnings contenders from an edgy infra to Titagarh Rail. Abbott India came out with a decent set of numbers. For Gujarat Pipavav, it's been a very impressive set, as is the case for Ircon International as well. lot of order inflows too. Look at HAL. The government has now issued a 1 lakh crore rupee tender for a 60 multi-role transport aircraft. So the order flow clearly continues for this. Black Box has won an order from a US-based company. Vascon Engineering has bagged an LOI worth about 126 odd crore rupees from PWD. Then a couple of other earnings reactions, Apollo Hospitals, there's Lenskart, there's a GMR Airports as well. There's Sun TV, which came out with its numbers too, and then Tata Motors CV as well. And most of these names are reacting positively to their earnings, wherever the positive earnings were. The additions in the MSCI index in the August review, Adani Energy, Grow, Loris Labs, and Lenskart. Let's check in on these names as well. Would be curious to see what Adani Energy is up to. Pretty sedate in trade. Grow, Loris Labs, and Lenskart perhaps is where you will see a meaningful move for Lenskart. Of course, there is that added bump up of the earnings as well. And then Astral, Balkrishna Industries, SBI Cards, which have also been excluded from that list. So that's the other bunch of names to really keep on your radar. But talking about Grow, Pankaj, curious to know, where is it that you're scouting further opportunities within capital marketplace?
So don't cover the brokers, Aisha. What we like is, again, asset management companies. So that's a sort of a very stable business to be into. The inflows have also been robust, minus the large caps, what you have seen recently, those have seen an outflow. But I think within the overall market cap as a space, see, with 16-17% kind of earning CAGR, in fact, this quarter was a lot better. Plus, AUM sort of being getting better. I think AMCs are one of the better businesses to be into with high teen kind of a growth, because it captures both the price appreciation plus the overall growth in earnings. So I think AMC is what we like from a portfolio perspective.
Okay, betting on AMCs, not the brokers. That's the view coming in from Pankaj Pandey. Pankaj, we'll let you go on that note. Thanks as always for your time. Just counting down then to the market open, and let's check in on what and where the rates are settling in. For the Nifty, it seems like it's going to be one of those very, very flattish, at least to start, just circling around the 24,431 odd level. But Kunal, you were making the point that we've been in consolidation for the last 4 odd days, or at least the entire week pretty much. Does that set a good base for a further uptick? And do you see that happening?
Yeah, so it's like a one step back, 2 steps forward market, which we've been earlier there were 2 or 3 points where the markets had drifted lower towards the lower end of the previous range, around 23,750 mark. We tested this level twice. Whenever we did that, the markets in the next, I think, a couple of weeks managed to move back towards 24,350, 400 mark, which is the previous range. This time around, of course, the range has shifted higher for the indices, thanks to the support from so many of the other underperforming sectors making a comeback. So now we are looking at 24,300, 350 as a fresh base for the index. Yesterday, we managed to retest the lows. There was an intraday move in the last half an hour, last 1 hour for the indices. And I would sense that that should trickle into the index, showing signs of strength over the next 1 to 2 weeks.
Okay, that's the take coming in right now on what the market setup is looking like. 15 seconds left to go before we ring the opening bell for this Thursday morning. And it seems like the start could very well be